Hey, good morning. This is Mayor Valensky with Driving Markets. Hope you're all well. Driving while talking about markets. Okay, anything said in this piece is an opinion only. It's for media publication and it's not financial advice or investment advice. If you make money as a result, fantastic. If you lose money as a result, then I can't do anything about it. It's commiserations. Okay, so let's move on. So yesterday there was a fight, a dispute, a lack of coordination between two Fed members, one Lael Brainard and one Chris Waller. Now, Lael Brainard is the vice chairman of the Fed, and he indicated or intimated that they can take the foot off the gas regarding interest rate rises in the US. So Lael Brainard is suggesting that there could be an easing of interest rate policy, and that would and did add further rises in financial markets yesterday, until Chris Waller came out, who's a governor on the board, one of the governors on the board, and said that actually it's far too early now to even consider slowing down interest rate rises, considering that inflation still is at 7.7%. So they had conflicting reports. So the market went up, then the market came off. Now the question is, or more than the $1 million question, the $10 million question is, where do we go from here? The equity markets I'm talking about mainly now, the equity markets have shot up since last Thursday when inflation came in lower than expected. It's had a big rise. The Nasdaq has the biggest rise ever of 6.3% in one day last Thursday. So is there going to be profit taking in these levels? And is the Dow, the Nasdaq and the S&P going to come down? Well, they came down slightly yesterday, and I was immediately of the opinion that there's going to be some profit taking, and then overnight the futures went up. So I'll give you my take on events, what's likely to happen on equity markets in the US mainly, and obviously across Europe and the UK. I think we're going to go in for a major correction. In fact, what I'm looking for is the Dow to fall to around about the 25,000 level. I've been calling the Dow down to 25,000 from the beginning of the year. I said by the end of the year the Dow is going to be 25,000, but at the moment it's 8,000 points off that, and it looks very unlikely as of today, unless some major crisis, that the Dow is going to go to 25,000. But overall, I want to correct myself and say I do expect the Dow to be 25,000 within the next, I would say, 3 months, okay? Because that is the true level of the Dow based on the economic activity. As regards the Nasdaq also is far too high. Take into consideration, yesterday a lot of the high tech and the big tech fell. Amazon announced it's laying off 10,000 workers. Well, 10,000 workers is only 1% of its workforce. It's got 1.5 million employees. So lay off 10% in relation to its workforce is absolutely nothing. It's insignificant effectively. However, the shares went down. Now, Amazon is at $98, $98.50 a share, and I'm calling Amazon down to around about the $70, $75 a share in the near future, as it's going to have a big impact on corporate earnings. The reason why it went down, because if it's laying off staff, then it's not a good sign as to where the company's going. Conversely, when Meta laid off staff, the shares went up because Meta was already being forced to cut costs. But this is a new revelation as far as the markets are concerned, and Amazon just announced that they're going to lay off 10,000 members, 10,000 employees, and the markets didn't like it. But Amazon is in trouble, and Amazon is going to follow Meta Facebook downwards. Now, talking about Meta Facebook, which was one of my favorites, it's at $113 a share at the moment, and I would see it as a sell. I'm still holding on and still of the view that Meta is going to go all the way down to around about the $70, $75 level in the near term. Okay. Also, Microsoft went down yesterday, Google went down. The high-tech sector was particularly affected. It is far too high in the high-tech sector, and it looks like it's going to go for a major correction. So overall, there might be a little bit more steam left in equity markets, but I can see profit taking coming in. Sorry, I'm just driving. I can see profit taking coming in, and also I can't see corporate earnings beating on the retail side, beating estimates. I just don't see that happening. In this week, you got a whole bunch of tranche of retail earnings in the US. Moving on to other areas regarding FX, Forex, foreign exchange. The dollar had a little bit of strength yesterday. It was strong against the pound, the euro and the yen. So where is the dollar going to go now? Well, it all depends again on interest rates. So if interest rates continue moving up, then the dollar should move up. But the foreign exchange markets have priced in the December move. They've not priced in a large January move. So if there was a 50 to 75 basis points large December move, and then there was a large January move, you see the dollar fly upwards. Okay. Now, interestingly enough, if you look at dollar yen is one of the majors whereby really you should be buying it. Why? Because on dollar yen, the yen is running at practically zero, near to zero interest rates, or Japan's running close to zero interest rates, where the US still has high interest rates. Therefore, the dollar becomes far more attractive as an investment than the yen. And that's going to continue, I wouldn't say ad infinitum, but there's no indication whatsoever that Japan's going to change its interest rate policy. So therefore, the dollar yen at the moment is 140. Probably it looks like a buy, and it's going to again try and test the 150 level. That's interesting in dollar yen. And the other one I'm also a big fan of, that's because I'm English, is cable, which is pound dollar. I just think the pound, even though it's gone up to 117.5, I still believe and I still feel as though it's low. Now the technicians here and the analysts could call it and say, you know what, it's had a hell of a rise, it's too much. But I'm talking, when I talk business, I talk fundamentals, and I believe that the pound should be minimum in the near future 120, 122. The next level is 120 really, to see if it breaks through that. But all depends on the mini budget and how Rishi Sunak is going to manage the overall political, geopolitical and the economy in the UK. But I am in favour of buying the pound. Any dips in the pound looks like a buy. As far as euro dollar is concerned, the euro overall is in shocking state. Europe's in a shocking state. I can't see the euro climbing any much higher, and it looks like an opportunity to sell to these levels. Those who are trading gold, I've got my eye on 1800 as the next level. I think it's going to try and test that. If it breaks through that, then it could see 1820. Conversely, if it doesn't, then it's going to float all the way back down to around about the 1720 level on gold. Oil. Now, oil came off again yesterday. China has discovered a new corona outbreak within China, so they're going to impose further lockdowns, and China is going each week. It's in lockdown, not in lockdown, new corona, new virus. So China is a very volatile situation, but overall China is in a very poor state. Its property market is absolutely being trashed lately, and it's on the way down, and I'm suspicious and suspect that the rest of the world is going to suffer the same 30-40% drop in properties. I know it's hard to believe at this stage, but also at the beginning of the year it was hard to believe that interest rates are going to be where they are now. No one could believe that, apart from me, when I said that interest rates are going to be easily 3.5% to 4.5% by year end, and no one believed in January this year that interest rates would get anywhere near 1%, never mind 3.5% to 4.5%. So China properties down, China economy is in a state, it's going into lockdown, not into lockdown, and there's a major supply line. That major supply line is supply problem is going to continue to frustrate inflation going forward. I cannot see inflation coming down, even though it came down on Thursday, which was, in my opinion, a one-off. I just can't see the trend changing in inflation, and I'm still talking about double-digit inflation in 2023, which will have a big impact on the foreign exchange markets and a big impact, obviously, on commodities and equities. US 10-year Treasury bond went up yesterday to 387. It's still on an upward trend, so bonds are still going to be rising, and they haven't broken that downward trend. Again, it depends totally on the interest rate policy within the US, but I expect bonds to rise much, much, much further on the treasuries. Cryptos, Bitcoin is a sell. It's selling at this level. It just can't hold on. There's nothing there to really push it up. Even if it drops to 15,000 and a load of buyers come in, I just can't see it. That's going to go. There's nothing there behind it to push it higher. So Bitcoin in the crypto sector, especially Bitcoin, Ethereum, are at these levels going to fall further. I'm calling Bitcoin down to 15,000 very near term, and if it breaks that, then it's going all the way down to 10,000. One viewer sent me a comment yesterday that it's going down to $1. Could be the case. You never know. There could be the end of Bitcoin in sight. Who's to know? But if this meltdown, if this meltdown continues on the crypto sector, with FTX going bust and other crypto platforms also at risk, then you could end up seeing a major meltdown. Binance is trying to set up a massive fund to support platforms that are in trouble. It's not going to succeed. They're not going to set up the fund. It ain't going to happen. There's just not enough money around at this stage with high interest rates to start setting up funds in order to go and rescue the platforms that are in trouble. Platforms that are in trouble are going to go bust, like FTX did, etc., etc. So I've covered most of the areas today. So we're looking, in summary, we're looking at potential bit more dollar strength in the dollar weakness in the near term, a bit more equity strength, but then there could be a major fall in equity markets, and I expect oil at this stage to rise above $100 over the winter period. This is Mayor Valensky with Driving Markets. Don't forget to subscribe. Don't forget to have an Instagram channel. Don't forget to comment. Don't forget to share, and tell me if you like the channel, if you want something added on or something changed. Yes, it's gone on for 12 minutes, a lot to talk about. That's the way it goes. Have a good day.